Hey, hope everybody had an awesome week, that you crushed your goals, that you tore it up, accomplished everything that you wanted to accomplish. I had a pretty awesome week, getting these loans wrapped up in record time. So, super stoked about that. But hey, Ryan Lee with Planet Cheapskate popping on here like we do every Friday to make those banks compete, show you what a lower rate and cheaper fees look like. So that's what we're doing. So you know exactly what the rates are going to look like going into the weekend. And just wanted to start out by saying, hey, good luck to my realtor partners out there over the weekend. The competition has gotten fierce. And so let me tell you how some of my realtor partners are winning their deals. They're putting this little thing on there called 22 days or less. So if you are a partner of mine and we put in an offer, we can put an offer 22 days or less, and we can do that confidently. Whenever I have looked at the borrowers and confirmed their income, confirmed their assets, confirmed everything that I need to confirm to make the determination that that borrower is qualified for our accelerated closing. 22 days or less, and that is doing some amazing things. Our company average for my branch is 13 days. So, we can feel pretty confident in that 22-day guarantee that we're going to get things wrapped up in 22 days. In fact, I'm saving a bunch of deals that other lenders are just not able to get done, and I'm still closing them in under 22 days. And I always knew that it didn't really take that long. If you have things down to a science, if you have things working in perfect motion, the wheel is turning perfectly. We have it down to a science as far as processing goes. We have custom appraisal panels. That's amazing. That's been a huge breakthrough for our company. Is if we have these slow appraisers, if we have these appraisers who are on a vendetta to reevaluate all of Wichita, all of Kansas, we get them off our panel. We're not going to deal with them. We're going to deal with the professionals in our industry, and that's it. So if that's something you're interested in, reach out to me, 316-744-5819. Find me on Facebook. I post my closings. I post how long it takes us to get there. And hey, I'd love to take you to coffee, lunch, whatever you want, tell you a little bit more about how we can partner together and we can just dominate this market together. So hit me up on that. But with that said, I want to get right to these rates. Before I get to them, though, I just want to clarify these are not rates that you can get by going to your local bank, going to your credit union. These are these are rates, not banks. These are rates that I get by making 50 of the most competitively priced banks compete all over the United States. We have some local, some here local. We have some East Coast, some West Coast, some in between. We make them compete. When they know that they're competing with each other, they're going to send us their lowest, their best, and their most competitively priced rates that they can. Now, just to clarify, I never charge points on my quotes. Okay. Someone can beat my rates, but you're going to have to look at what their cost is, because I can beat my rates, but the cost is going to be higher. When I say that I never charge any points, that means a point is a percentage of your loan amount. And so I keep all of my rate quotes under a point, which is typically how I try to do my loans, unless the person wants to do a buy down, or there's just some factors that we just can't get them under a point. Maybe they got horrible credit or just a lot of things going on. We'll go over a point in that. Or if it's just a little tiny loan, sometimes it's a little hard to get it, under a point. But this is an average borrower, someone looking to borrow $200,000 and 700 credit score and a 30-day lock. So this is what we got. And cool, awesome news. I'm about 20 subscribers away from the $1,000 mark, where we're going to do the $1,000 Amazon giveaway. So that's super awesome. Invite your friends if you haven't yet. We're getting super close. Once we get to that $1,000, once we get to that 1,000 subscriber mark, one of you guys, one of my lucky subscribers, is going to win $1,000 Amazon gift card. I'm super stoked about it. It's going to be awesome. We're going to make a big spectacle of it. We're going to celebrate it. I'm doing kind of keto to try to lose weight, but I may, eat a little a slice of cake or something. You got to make it special for that $1,000 mark. $1,000 subscriber mark. I'm obsessed with $1,000 because I'm giving away the $1,000. It's awesome. And we're going to keep doing stuff as this channel grows. We're going to keep doing giveaways, giving back to the community. I'm going to think of new and innovative ways to give back. So um, that's that. Without further ado, let's get right to these rates. Okay. I did the explanation. Conventional 6.625 with an APR of 6.910. FHA 6.125 with an APR of 6.840. VA 6.125 with an APR of 6.326. USDA 6.125 with an APR of 6.579. So that is the rates. Not too much change there. And yeah, they're staying pretty flat. I know that the Fed raised their rate another 1/4%, and people get caught up on that news. There's a more important factor out there than the Fed rate that is influential over mortgage rates, and that's the core consumer price index. So follow the core consumer price index. It is a rolling 12-month average of the consumers, like the prices for stuff. Like you got shelter in there, you got food in there, you got everything that people spend money on is in that consumer price index, and they track it. And there was some high inflation months that are supposed to be falling off. So this Fed rate hike may not influence mortgage rates as terribly as people are expecting or thinking. I still think we have a ways to go before we get into a full economic recovery. I think there's some rough months we got to get through, probably coming in the winter. But the good thing is those down times never last as long as the good times. And we really have some smart people working for the Fed. Even though they do make some dumb moves, our economy is strong and our system that we have is stronger than any one person, any one administration, any one uh, government, anything like that. It's strong enough to make it through that. It's built on something that outlasts any of that other stuff. So have faith out there. It's always, no matter if it is a depression, a recession, a boom time, it's always going to be better owning a home than to rent. When you're renting, you're paying someone else's mortgage and you're paying 100% interest rate. When you buy, you may be paying a 5, 6, 7, 8, 9% interest rate, but guess what? A large portion of that is going towards the principal. That principal you keep when you go to sell the house, when you refinance that house. You want to pull some cash out, you can treat it like your personal piggy bank. That is there for you when you need it. So it's always going to be better owning a home. They're just hard to get right now. So that is what we got. Hope everybody has a happy and safe weekend. I will see you on the other side. Realtors, if you need any help with pre-approvals, if you got any loans out there that need saved, need another set of eyes, I've been saving loans left and right. It's my specialty. It's what I do. So hit me up. Let me know. I can help. 316-744-5819. Don't be too prideful to call me. I'm easy to talk to. I'd love to talk to you. I'll take you out to coffee. I'll buy you coffee. I'll buy you dinner. I'll buy you whatever you want. Just let's work on these. Let's get people in houses. That is what our mission is. That is what our goal in life is to do in this industry, is to get people into homes. So see you guys on the other side. Take care. Have a happy and safe weekend.